In this video, we take a look at 3 mistakes that auditors make. I'll bet you've run into some of these in the past, whether you've been guilty of them yourselves or you've seen other people do these things. You're going to see in these 3 mistakes some things that are fairly common as auditors do their work. So let's go to the last chapter, chapter 22, 3 audit planning mistakes. Here we are in chapter 22, and the first mistake is not tailoring audit programs. You know, we've spent weeks in all the prior videos looking at risk assessment. If we do all of that work and then we don't adjust our plan based on the risks that we've identified, then what good is risk assessment? It's a complete waste if we don't take that information and then tailor the work that we plan to do. So if we see a risk in a certain area, such as accounts payable, say there's a lack of segregation of duties there, then there might be a fraud risk. And if there is, we want to create audit procedures, audit steps that address that potential fraud risk, and we place those in the audit program. So that's an example of how we would tailor the audit program. So many auditors purchase their audit programs from national publishing companies, and then they never adjust or tweak the standard audit program. And this is a huge mistake. It goes against everything in the audit standards. Now, those pre-formatted audit programs, they're a great starting place, but they're not the ending place. So take that pre-formatted cash audit program, for example. Look at the steps in there. If there are steps that you don't need to perform, take those out. If there are steps that are not in there, add those in to that audit program. So as you know, we create audit programs for each transaction area. And so look at each one of those audit programs. Look at your risk assessment summary form that we've talked about in a prior video. If there are identified risks, then you want to link the procedures from that risk form into the audit program. Now, many audit programs will have the assertions that an audit step addresses, and that's helpful. But one point I want to make here is make sure those assertions for those steps line up with the relevant assertions in your risk assessment summary form. So, for example, if existence is a relevant assertion in cash, then there should be an audit step or 2 that addresses the existence assertion in the audit program. That's part of your linkage, but make sure you look at the risk assessment summary form for each area, such as cash and inventory and payables, and those relevant assertions there that you're seeing audit steps with the same assertions over on the audit program. So the first mistake auditors make is we don't tailor our audit programs, and we need to do this. And quite often they need to be tweaked annually, because you'll have changes in the business or the government or the not-for-profit from year to year. Even though it's the same entity, you'll have changes within that business or not-for-profit or government from year to year. And then ask yourself, do I need to change the audit steps based on the changes in the entity? Mistake number 2, prior year work papers are used as the current year plan. I've seen this hundreds of times where auditors will look at the prior year file, and sometimes the audit managers are telling the staff, just follow the work papers from the prior year. Well, that should not be your audit plan. Your audit plan is based on risk assessment. And just like we said in the first piece about tailoring the audit program, we do the risk assessment, then we create our plan. If the prior year audit work papers are the plan, then again, why do risk assessment? I'm not saying take all of the prior year work papers and throw those away. You don't need to do that. There is some strength and power in the visual of seeing what was done in the prior year and then seeing whether or not we need to do that same thing in the current year. If you do, then the prior year and the current year work papers might look very much alike, and that's totally fine. All I'm saying is don't default to the prior year work papers as your plan. And then mistake number 3, a balance sheet audit approach. I've had this conversation with people dozens and dozens of times that we need to get away from auditing just based on the balance sheet. And this goes back really 30, 40, 50 years ago. It's the way people used to audit. We'd audit cash, receivables, inventory, debt, payables, equity. We'd audit each of those balance sheet accounts and then really not give much attention to the income statement. And some of the logic there is based on the accounting equation, which is total assets equals total liabilities plus equity. And so the thought there is if I beat up the balance sheet and I do a really good job of auditing it, then everything should be okay. And one more part of that logic is auditors think, equity, that total assets equals total liabilities plus equity. Equity is comprised of prior investments of the owners, but also retained earnings. So we close out the net income from the income statement into retained earnings. So again, the logic is if I audit the balance sheet, then everything's okay, and maybe the only thing that could be wrong would be the classification of revenues and expenses. Well, that's a faulty thought. And I'm going to tell you why, and please listen to this because I saw this happen, and it's a good illustration of why the balance sheet approach is a dangerous approach. So in the last 2 or 3 years, I was privy to some information in relation to a CPA firm that was being sued for around $9 to $10 million. And the reason they were being sued is they used the balance sheet approach. They didn't do hardly anything in relation to the income statement. And then they didn't really do their walkthroughs right. Well, for 6, 7, 8 years, the CFO of the company who controlled the payroll process was sending extra payroll payments to himself, and he stole around $9 million. So that $9 million that disappeared, if you did a balance sheet approach and that was it, would you detect that? Probably not. If you're auditing accrued payroll at the end of the year and you tie it back to the payroll records, is that going to detect your payroll theft? Probably not. And so we need to audit the balance sheet accounts, obviously, but we also need to audit the revenues and expenses. We need to do the walkthroughs to see if there are any internal control weaknesses, because quite often a fraudster will exploit the internal control weaknesses, and then that money disappears and we do the balance sheet approach and we don't detect the theft. And so it's important that we do risk assessment like we've talked about in the last several videos and in the book that I've published. It's important that we do those procedures, mainly because of the fraud potential there, I think. But also you want to abide by the professional standards, which, part of that is the audit standards. So you want to comply with those. And those audit standards don't point you to the performance of a balance sheet audit approach. So again, real quickly, we need to tailor the audit programs each year. We need to not use the prior year work papers as our current year plan. And then we need to not use a balance sheet only audit approach. So I hope you've enjoyed the ride over the last, I think we've done 24 videos, maybe 25 now, but I hope you have found those helpful. If you haven't had the opportunity to see those, they're all on YouTube. You can go back to video number 1 and come forward. And, I promise you, if you'll do that, go through the videos, and you'll need to watch those piecemeal because you have several hours of training there. But by the time you get done with those, you're going to understand risk assessment in a way that maybe you never have before. If you haven't already, pick up my book, Audit Risk Assessment Made Easy. You'll see it out on Amazon. This is sold really well. I've gotten a lot of comments from around the world about this book, and I'm confident you'll find it useful as well. Well, it's been fun. It's been good to be with you during these videos, and I pray Godspeed to you. Take care. Bye now.